All right, guys. Good morning. Good morning. Hope you guys are doing well. We are here today. Honestly, the yen carry trade last week, if you don't know what that is affecting markets a lot. So what happened is that basically a lot of so generally it's the Japanese yen. Generally, Japan is very dovish, like low interest rate environment, and a lot of traders take advantage of that low interest rate environment by using that cheap leverage and buying U.S. assets like bonds and whatever with it, stocks. And so they use that cheap leverage to buy it. Well, last Monday, Japan came out pretty hawkish, surprisingly hawkish, and this scared a lot of people. And what this ultimately meant is that leverage wouldn't be so cheap anymore using the Japanese yen. And so the consequence of this is that everybody started panicking and selling their yen trades, right? Which caused massive dumps in the market last week. But we did rebound back up a huge amount. Like if you look at the Q here, let's zoom in for a second. We did rebound like a big amount. So it's not like we dropped out of fear and then we rebounded back up. So again, like last week started off, let me see my calendar here. Last week started off on the 5th. So let's look at 5. So here's 5 right here. So again, you can kind of see on August 5th, we dropped from where did we close? 448.75s. So we dropped from right here all the way down to freaking 420s. Very, very big drop. But we're now actually above where we were on the Q, at least prior to this, right? So again, you can kind of see here, the 5th started off, at, the 2nd closed, the Friday of the 2nd closed at 448.75. And we gapped all the way back down, but we're back up over 450s now. So we're looking much better than we were. It doesn't mean we're going to hold in that way, but we're looking a lot better. That's all I'm saying, is that we're looking a lot better. It doesn't mean we're going to hold. This week is a massively important week for a couple reasons. The main one is CPI inflation happens this week. This is one of the biggest inflation reports. Probably, I would argue this is probably the biggest inflation report that we get. Now, the Fed uses the Personal Consumption Expenditure Index, the PCE, core PCE data, but they also look at CPI, certainly, and so they're going to be looking at this report. Tomorrow, we have PPI inflation, which is producer inflation. And so, yeah, we'll see what happens here, chat. Be careful, your fireplace is on. You should turn it off. It's very hot all over the world. That's nonsensical, Bao. It's all relative. Everything's relative. It might be cold in Antarctica. It doesn't mean it's cold right now in Texas. I could use the same argument with you and say, hey, it's cold in Antarctica right now. I need this heater, right? But again, it's a nonsensical argument. It just doesn't make much sense, sir. Yeah, so anyways, we basically rebounded all the way back up here. We're all the way back up. Look at this big rebounding move. I'm happy with this move. This move is nice. I'll take it. We kind of needed it. What it ultimately showed is panic. A lot of stuff is talking about rate cuts next month, and I think we're going to cut rates next month. You got some people that are like, hey, I don't know if we're going to cut rates, and maybe we don't. It's highly probable we do. I just think we're going to cut rates next month. I think it's very probable, especially they don't want us to go into a recession. Yeah. What do you guys think? Will they cut rates next month? I think they have to, right? Now, I don't think we necessarily need to, but I think they're getting so much pressure. It's an election year. I think the economy, people are
all right, guys. Good morning.
People are questioning the economy now, and so I just think, will the Fed cut rates in September? Yes or no? Vote on that. What's up, Frost? Yeah, so this week, guys, let's take a look. So tomorrow we have PPI inflation data. The month-over-month reading is always the most important. It's expected at 0.2%. Last time it was at 0.2%. We'll see what it shows up as. 2.3% is expected on the year. We also have Wednesday CPI, which is the biggest report over PPI. PPI is still important. We'll have thousands here tomorrow, but we'll We'll have a lot of people here on Wednesday for sure. Base CPI is expected at 0.2%. Last time it showed up at a surprise negative amount. Remember, last time CPI showed up at minus 0.1%. This time they're expecting it at a positive 0.2%. So they are expecting inflation to spike up a little bit relative to last time. Year over year inflation expected to stay the same, though, at 3%, which is good, I guess. And so we'll see what that looks like. And then Thursday, we got jobless claims, unemployment filings. We got the Philly Fed Manufacturing Index, the New York Empire State Manufacturing Index. And retail sales data all dropping on Thursday. So Thursday is a busy day too. We got retail sales, Philly Fed, New York Empire State Manufacturing, and jobless claims, unemployment filings all dropping at 8:30 Eastern Standard Time on Thursday. So that's a very busy day here as well. That's a lot of stuff dropping at 8:30. So that'll cause some volatility for sure. At least at 8:30 when it drops. Friday, we also have some stuff. We got like Michigan's consumer sentiment, building permits, other some real estate related stuff. But yeah, will they cut rates next month? I believe they have to. Now, it's not 100% certainty, but it's pretty probable. If we look at the Fed watch tool here, we got 37 days until September. They're going to be specifically trying to cut in the 18th of September, so in about a month and a week. Right now, again, it looks like it's a 50-50 split between whether they're pushing for 50 basis point cut, 25 basis point cut. Right now, the 25 basis point cut has a slight lead at 51.5% versus 48.5%. But ultimately, there's not even an option in percentages for no cut. So just to show you the probabilities there, we're probably going to cut in September. I don't even necessarily think we should. I think the market is back. I don't think the economy is necessarily weak. And again, what is you guys' argument for rate cuts next month? Right? I don't necessarily think the economy is incredibly weak, and I'm genuinely curious to see what your argument is for rate cuts at home, chat. If you think we should cut rates next month, why? Genuine, honest question. I'm not even saying I disagree with you. I think it's okay to do a 25 basis point cut. I don't really see I really don't want to see anything over that. But also, I'm kind of in the middle of buying a cash investment property, and so I have an interest in rates staying high. Cash is king when rates are high, and so I'm trying to buy now when rates are high before they start going back down. So I like rates being high right now. But point is, why do you think we should cut rates? I'm interested. Yeah, well, the breakdancing lady and from Australia, she's hilarious. What was she thinking? The breakdancing lady from Australia. Why? Why would she do that? Yeah, I'm down for a rate hike, personally, honestly. I really am. I think we need to raise rates, not lower them. Inflation is 3% now. Fed could start to cut. Well, that's an all right option. Yeah. Well, there's definitely a political aspect for sure, Maria. 100%. They're getting political pressure to cut to make the economy stimulated and better leading into the election. 100%. That's what they're pushing. And now Powell says he's objective and independent of all that stuff. And maybe he is. I don't know. But I'm skeptical. Honestly, what the heck is breakdancing even doing in the Olympics in the first place, bro? Listen, I'm not hating on breakdancers. But that's an art that basically lost its hype 30 years ago. Nobody cares about breakdancing anymore. They've evolved to other styles. I think just a general dance is fine, but breakdancing, that's like doing a competition for the best 8-track player. You know what I mean? It's just not sensical for the Olympics. It just doesn't make sense. Bonds are flying last week. Yeah. Does the market react positively? Think if there is a rate cut, or you think a big sell-off may occur? I think a rate cut is the base case right now, Phil. So I think it's kind of like a neutral reaction. I think everybody expects us to cut, and so that's kind of the overwhelmingly expected outcome versus a surprise where we might get a more brash reaction. But yeah, I think that's what's expected. So. No, I think that's getting too political, Hayden. I think you got to understand. So basically, the Bank of Japan came out really hawkish, and I think they pivoted back to being more dovish afterwards. And so I think that's where all the sudden selling and then buying came in. I'm not saying breakdancing is easy. Shout out to all. There's a lot of talented breakdancers. I'm not hating on them at all. I understand it's a genuine dance category with, that takes a lot of skill to do successfully. And so I'm not hating on breakdancing in any way. I just don't think breakdancing is at the height of its popularity anymore. And I think that it's an event in the Olympics where, the amount of interested people watching that outside of just curiosity is going to be very low, right? Like, I just don't think breakdancing is a necessary addition. I think they should add jiu-jitsu personally. Like, I think jiu-jitsu is a good addition. They have judo. Yeah, Canada won gold in men's breakdancing. Polestar should fly, maybe. Hey, we'll see. Yeah, I mean, so interest rates are high. Interest rates are high, right? So the percentage interest rates are high. What does that mean, right? What does that mean is that cash is going to be a little bit more leverage. If interest rates are high, that means cash gives us more leverage, right? So the dynamic of this is that if you have a lot of cash and you're looking to invest, I'm not telling you, I have no idea what's going to happen. But I think over the next year, there's typically a lag, but over the next year, interest rates are going to start going down. And what this means is a couple things. Number one, prices are already up a lot in real estate, but we might see more price spikes moving forward in real estate. We might see prices go up. Number two is that cash is going to be less influential over real estate purchases. Like right now, if you go to somebody and you're like, yo, I got cash, I'll pay cash right now. There's a chance that they'll accept it based off of cash because of the dynamics of like what's going on with high interest rates. But yeah, within a year or two, I think interest rates are going to drop, and that's going to be less of a factor. Well, MMA, they're going to say is too brutal. I think jiu-jitsu's fine, though. Palantir. I'm in Palantir. It's up nicely. That's nice. UPST, yeah, Upstart's been around a long time. Upstart. Let's see, Upstart has not had a good rise. It's had a good year. Now it's technically green. Is this Christmas music? It is. Wow, they added some Christmas music here, bro. Like it's still summertime, dude. Like it's Christmas trap music. All right. They added Christmas. There we go. Yeah. Come on, it's still too early to cut rates. I know, I'm with you. I think it's way too early to cut rates, but it doesn't matter what I think. Guarantee they drop rates. Yeah, 100%. Yep. Inflation's going to spike. Why? Because people are going to have low interest rates. They're going to have cheap money. They're going to spend more. Inflation's going to spike from this, 100%. But the economy's going to look good for the election is what's going on. All right, guys. Yeah, so honestly, the stock market is up a pretty big amount. The SPY's gapping up a little bit today. Nvidia's up. The Q is up. Apple is green. So a lot of stuff's actually green on the day, which is interesting. Yeah, so Supermicro is doing a 10-to-1 split. Honestly, kind of necessary. I'm still skeptical of it, though, to be honest. Like, it's high risk, high reward. I talked about this last week. That's a lot of risk. Gold. Yeah, I mean, there's a lag for sure. Like, it's not going to, like, lowering rates is not going to, there are a couple things, right? You hear lower rates, right? This is number one, this is not going to immediately lower interest rates to consumers in terms of mortgages, auto loans, anything like that. It's not going to immediately lower interest rates. That's the first thing. The second thing is that, again, that's the first thing. The second thing is that there's a lag for inflation as well, right? So there's going to be a lag. It takes a while for it to trickle into long term. Right, so short-term interest rates, when you say rate hikes, rate cuts, we're talking about short-term, the federal funds rate, which is the interest rate that banks charge each other to hold money overnight, lend money overnight. And so, but there's a lag. It takes time. It's not going to immediately influence long-term rates. There's a trickle effect from it, from prices basically trickling into it. And so with that said, it'll be about a year before like interest rates really start to drop. So there still is some time, I would say. Inflation is similar in that regard. It's going to take time for those interest rates to drop, and so in that regard, it's going to take time for spending to spike because of it, right? So those are the correlations, and it's not always perfect, you know. So it might take longer or shorter, based off of what I just said. It's not 100% accurate. It might take longer or shorter. Where's the timer? We don't have anything to time today, bro. CPI for the last 3 months has pushed the market up. Well, it pushed the market up because it had negative 0.2% last time, VLO, which isn't necessarily going to be the case this time. This time they're not expecting, or it pushed the market up last time because it had positive, or it had a decrease in inflation, and a literal decrease, negative 0.2%. Now it's going to go back to a positive increase of inflation, and so I doubt it's going to have the same positive effect that it did last time, although it is possible. We don't know for sure. PPI is tomorrow, not today. PPI inflation data is tomorrow. How could a grandpa? I don't know. Yeah, today's Monday, brother. All right. Again, gold. Gold is looking really nice, to be honest, here today. Yeah, we got these beach pics. These beach pics of my family are nice, man. You know, as you get older, you appreciate a good beach picture, you know. And people see this picture and they're like, hey, are you super tall? Not really. These two are kind of short. You know, I mean, I'm not short, but I'm not tall. I'm not like crazy tall, at least. Anyways. Sorry, I was scrolling through Pawn. I saw the pictures. I had to look at them. Anyways. So Key Corporation announced a significant move with the Bank of Nova Scotia agreeing to make a strategic minority investment of $2.8 billion into the company. It'll see the Bank of Nova Scotia acquiring shares at $17.17 each, amounting to a 15% stake roughly into Key Corp's outstanding common shares, signaling a robust vote for confidence in Key Corp's market position and future. Looking at some other market news today. You know, we got some other stuff. The Adani Group shares are losing up to $13.4 billion after Hindenburg accusations against regulator. And I saw Hindenburg talk about this last week. If you look at Hindenburg Research, which is a short report firm, they said something's coming with India last week, and they dropped it yesterday. You know, so they said, yeah. Yeah, so they said on August 9th something big soon in India. It looks like this is regarding this is regarding the Adani Group, right? So they lost up to 14 billion after Hindenburg dropped that report. They recovered a lot of the losses after they accused the head of India's market regulators of having links to offshore funds also used by Adani. The battle between them and the Adani Group began 18 months ago when the U.S. short seller alleged that Adani, and this is all quoting Reuters, okay, improperly used, they allege that Adani improperly used tax havens, accusations which the conglomerate denies. And there's not that many U.S. stocks based off of this. It's mostly overseas markets. But the total losses for the day at the time amounted to about $2 billion after the early plunge. It's lost $150 billion in value after the first report in January of 2023, but shares have recovered much of the losses since then. Yeah, so Nifty is kind of like the S&P of India. Whistleblowers who put the data out for Hindenburg. Does being tall benefit you in fighting? Yes. Mostly. It depends, right? Like, there's levels. Yeah. Yeah, my wife and daughter are pretty short. My wife and daughter are the same size. They're the same height. Which is kind of funny. Yeah, we don't have any big reports coming out today. Does being tall benefit you? So, my wife was thinking about trying jiu-jitsu out, and I kind of told her, I was like, but she was like, hey, I'm short. I was like, yeah, and that's going to negatively affect you. But, like, the easiest way to put it is, like, there's different levels, right? Like, a lot of, if you're shorter, one thing that I have going for me is speed, right? I'm quick. Like, I'm fast. I move quickly. And so if I'm fighting somebody, like I rolled against somebody on Friday, right? And this dude is probably like 6'2", like 230, and he's not chubby at all. He's just stacked. Like, he's just big, and I rolled against him, and he caught me in an armbar, and there was no fighting that armbar. He's just so strong. He's just, but again, before that, I caught him at a guillotine and tapped him out with a guillotine. And so height and strength are not the end all be all. It all has to do with skill. But it certainly matters. Don't let anybody tell you it doesn't. It certainly matters. Anyways, back to... Yeah. Yeah, reach is important, especially in... Yeah, for sure. Reach is very important. Like, I've got very long arms, like, relative to my height. And that's helpful, for sure. But my legs aren't the tallest. It's weird, It's hard to explain, but yeah. So I'm kind of like, it's hard to explain. Is Palantir a good buy or overhyped? I'm in Palantir. I don't know what it's going to do. It's breaking lifetime highs, though, which is nice. I think it's lifetime highs. No, it's not quite lifetime highs. Palantir got up to $45 when it originally IPO'd in 2021. And so it's still down, roughly a third from where it was, but it's still breaking highs, so that's nice. Highs of the year, at least. Palantir will have to wait and see. It's still young as a company, but I'm optimistic. They should be proud of what you do. You are diligent and disciplined. Thanks, man. Yeah, I'm average, Sass. I would love to round up. I'm like 5'11", 5'10" and 3/4, 5'11", like my actual height. I'm not trying to be like, yeah, I saw Boosie do an interview and he's like, yeah, I'm 5'9" and a half. And like everybody kind of trolled him for saying he's 5'9" and a half. But I'm basically 5'11". I'd love to round up and just say I'm 6 foot, but I just can't. I just can't feel good about myself rounding up like that, I'm just not, like, because I'm not quite 5'11", like I'm slightly underneath it. And so if I round up to 6 foot, everybody's going to look at me and be like, dude, you're lying. And so I'd just tell them the truth, It's easier. On Palantir, it depends on your time horizon. Are you looking for a trade? Yeah, I mean, long term, it's probably going to be okay, but we don't know enough about it. It's too early. You know, the safest companies are long-term companies, but they don't have the type of growth a lot of people want. And so I think Palantir is a good mix of like good long-term trend, good yearly trend. It's been trending very well for like a year straight. Right, and I'm not that, right? I'm closer to 5'11" than 6 foot, so I can't really round up like everybody wants to, you know. Like, I'm not short. Honestly, I was short my whole life. They say that they can see how tall you're going to be when you're very young now, but when you're like 3 or 4. But I disagree, because when I was 3 or 4, I was very short. I was like the shortest kid in my class up until 6th grade, right? 6th grade, I hit a growth spurt and I grew taller. I'm not going to say tall, but I grew a lot when I was in like 5th and 6th grade, you know. Prior to that, I was very, very short. Like, they thought I was going to be like 5'3". And so, yeah, I don't know. Whatever my parents were feeding me in 5th grade, props to them. Upstart is at $36. Gap it up a little. A lot of stuff has actually rebounded a lot. Yeah, I just can't claim it. Yeah. Yeah, I'm not judging you if you're short either, you know. My son might not be. I mean, I hope he gets tall, but who knows? It'll be tough to see about my son. So, like, my dad's side's all very tall. My aunts are 6 foot tall. My cousins are 6'2". My dad's 6'1", 6'2". So, like, they're taller on my dad's side. My mom's side is all very short. My mom's like 5'4". My wife's side is very short, right? Like, my wife's grandfather is like 5'2", 5'3". And so it's those Cajun genes, man. So I just hope my dad's side takes over, but who knows? Yeah, I think this music might be a little bit too overhyped for this early, huh? Would y'all rather some like relaxing music here? Right? This is too hyped up. I'm just gonna. There we go. Yeah, I mean, we had such volatility, and the volatility's not done. Remember, guys, like, we have big market stuff going on this week. Again, tomorrow we have PPI inflation data. Wednesday we have CPI inflation data, which is a very, very big, very, very relevant, very, very important report. So it's all really important here, and you know, it has the possibility to massively benefit or massively hurt the market. So just be ready, chat. Like, a lot of stuff's going on. You know, yeah. Is PPI and CPI expected to be low or high? Not necessarily. It's expected to be higher than last time. Like, again, last time CPI showed up at a negative, which is rare. It's very rare that inflation literally goes down. Most of the time we just want inflation to slow down. And so, again, we generally want inflation to slow down, and it's very rarely going to actually go down. Last report, it actually went down. It was minus 0.2% for CPI. And so this time they're not expecting that. This time they're expecting 0.2%. And so, yeah. And we'll see what that looks like. You know, again, we'll see what that looks like. All right, guys. All right, so Palantir up to 30.20s. How's the cauliflower air coming in? It's good, bro. I don't think my ears are doing it. Honestly, my ears are okay. I'll worry about it. I really don't want cauliflower ear. And I train enough to where I can get it, you know. Like I usually trade like 2, 3, 4 times a week. It just depends. Which is definitely enough to get it if I keep at it, but I just hope I don't get it. They say sometimes it's just genetic, like some people are more predisposed to it. I hope I don't get it. What's up, Jimmy? If I'm just starting in this whole world, what should I do? What do you mean, stocks? I don't know, man. You could do trade small, trade slow, paper trade first, and don't risk obscene amounts of money in the beginning. You're almost certainly going to lose it if you do. Everybody thinks they're going to be different, and somehow everybody tries to rush stocks, right? So everybody wants to be an expert quickly. You know, the Dunning-Kruger effect is real here, and a lot of people are acting like experts really early on whenever they are nowhere near experts. Everybody wants that validation, and so there's a lot of people pulling you in all these different ways that you want to just avoid and be smart and understand that most of the time the best move is just to take it very slow in this, especially in these markets. Take it very, very slow. Trade small, paper trade, demo trade, trade a funded account program. Just don't risk tons of your own money in the beginning because again, you're almost certainly going to lose that money if you do. Like that's the thing to understand. You're almost certainly going to lose it if you risk it in the beginning. Are you bullish or bearish this week? Looks like the market going to rally a bit until CPI and we go down another leg since we are at some key resistance. What are your thoughts? Yeah, I mean, honestly, I guess I'm a little bearish after the open today. I think the markets might go down. There's a couple of reasons. The main one is that we've rebounded all the way back up. You know, so we had this big major drop, right? So we had this big major drop. Again, markets dipped, 7-8%, dropped a massive amount, and then we've essentially rebounded all the way back up some, right? We were right here prior to this. And so we're already back over where we were prior to the flash crash we had last week, right? And so I think in just terms of general balance, I think we're going to decrease a little bit leading into inflation data. I think markets are going to correct. I think NVIDIA might come back down a little bit and correct. And I think as long as it's not too brutal of drops, then it's still okay. And we could still be optimistic. But I have no idea for sure. Genuinely no idea. Not an investment professional. I'm not liable if you lose. Always make your own assessment. I might be wrong about everything and anything I say. I do trade off stream. You're not going to see all my trades. Don't copy me. We are so far down since July 15th. I don't know why you think we rebound back up. Yeah, I mean, anybody can isolate a time frame, YZ, and say we're up or down, right? Like, anybody can isolate a time frame. I could say, hey, guys, we're up over the last 1, 2, 3, 4, 5 days, right? Or I could say, hey, guys, we're down over the past 3 weeks. Or I could say, hey, guys, we're up over the past year, or I could say, hey, guys, we're up over the last 3 years. You know what I mean? Like, that doesn't mean anything. Anybody can isolate a time frame and then use that as some type of argument about me being wrong about us being up or down. Usually it just stems from a deep bias in one direction. Like, if you're really bearish, this is probably the case, you're really bearish and you hear me say, hey, we've rebounded back up, that might make you emotional. And if it does, I would take a step back and try to be more objective about markets. Nobody knows what the market's going to do, where it's going to go, anything like that. All I said was that we rebounded back up over the last week because we have. We're back up to where we were, plus higher than that, really, here. Doesn't mean we're not down over the last couple months. Doesn't mean we're not up over the last year. Anyways. Yeah, I can't get down with buying CrowdStrike here. CrowdStrike, just too big of a crazy influence over this stuff. It's just down too much. It's up too much and down too much. It's too weak to where it could have some crazy, terrible downfall still. And it's too down enough for me to short it. So it's too probable that it's going to bounce back too. Yeah, NVIDIA earnings are going to be crazy. I'm excited about NVIDIA earnings, but they should have a big move. Yeah, I mean, look, it depends on what time frame. It's all relative to the time frame here. Like, really, like, we could probably draw a trend here if you really wanted to. Like, look, tell me this doesn't look like a reasonable trend to follow if we here, look. Like, tell me that doesn't look like a good trend. Hold on, if it'll let me edit it. I don't know why it won't. There we go. Yeah, tell me that doesn't look like a good trend. And again, we're still trending in that way. It doesn't mean anything, though. Nothing's predictable. Ultimately, what matters the most here is what happens tomorrow and Wednesday. Tomorrow, Wednesday, PPI and CPI inflation. Thursday, we have jobless claims, retail sales, the Philly Fed Index, the New York Empire State Manufacturing Index, all dropping at 8:30 on Thursday. So Tuesday, Wednesday, Thursday this week, packed full of data, packed full of economic reports. And those have a big influence over markets. And so if I'm looking at the economy and the market right now, that's what I'm looking at. All of that stuff is going to influence what the Fed decides to do next month when they do their next rate decision. And so, yeah. What happens next week here? Market Watch, it usually gives me a better report. But Market Watch basically mirrors the report. Let me see what else we got going on next week. I haven't checked the calendar for next week yet, so I'm looking at that now. I know NVIDIA earnings are coming up. We got European CPI. Canadian CPI. Yeah, next week is kind of slow. We got like manufacturing and services, PMI data, new home sales. Next week we have basically nothing going on. Yeah, it's pretty light. What else we got earnings wise? I know we got NVIDIA earnings coming up soon. Yeah, we basically don't have anything. Next week's one of the slower weeks. We got Lowe's. Okay, so we got some earnings jumping. We got Lowe's, SunPower. It's still pretty boring. Target earnings, Macy's earnings, TJ Maxx, Williams, Sonova, Wednesday. Snowflake, Zoom. So we got some earnings dropping next week, so that's big. Thursday, we got nothing really. Bill.com. Friday, we got nothing really. Yeah, so the big one is, I guess, the week after next. So the week of the 26th, we've got a whole gang of stuff. I'm trying to see what NVIDIA earnings are. It's the 29th, right? For NVIDIA. Chewy, Abercrombie. Yeah, so NVIDIA is the 28th. And they also have CrowdStrike, Salesforce, Affirm earnings at the same time. So that's a big day with a huge report. Catch it back up on chat. I mean, does people long-term portfolio back to the level of last month, or is it just me seeing red? I mean, yeah, we're certainly red over the last like month and a half, right? Like that's very obvious. We're definitely red. I mean, we've had this pullback here on the Q. Let me delete this and then draw another one. Like we're definitely red over the last month and a half, 2 months since July, really. But again, that's okay. Like, we needed a pullback. It was time for a pullback. Every correction doesn't mean it's the end of the world, I guess is the point, right? And again, what I think, if we didn't rebound here, so if we didn't do this rebound, and again, I'm kind of bearish today, right? But who knows? Nobody knows. If we didn't do this rebound here, I would be much more skeptical. I would be much more skeptical if we did not rebound right there, right? But since we rebounded back up, we're still in this long-term trend that we've been in. It doesn't mean we're going to hold. Again, if inflation data comes in really bad, the market could dump. If inflation data comes in really good, the market could rebound all the way back up. And so we'll just have to wait and see what tomorrow and Wednesday show. But yeah, I don't think it looks like the end of the world yet, although it's certainly red. Now, maybe this means that we can buy up some stuff. But again, we're very green on the year. Like, here's a yearly chart, right? So here's a 52-week chart. Even if we look at just 2024, right? Like, just 2024, we're still pretty green too. But if we look at like a weekly chart, we're even more green. And so I don't think this looks like the end of the world trend-wise. I think with the microchip boom that we've had over the last few years, we needed a correction. This is something that I was saying before the correction. Before the last month and a half, I was saying the same thing, which is that my portfolio's light. We need a pullback. It's time to correct. It's not healthy if we continue going up. And again, this is basically what we got so far. And again, whether this is a longer term bear market is yet to see. Let me know what you guys think in chat. Who knows? I don't think I'm in Intel anymore. Yeah, I sold Intel a long time ago. I sold Intel at high 20s. So I got out pretty good versus where it's at now, which is at the 19s. Intel only ran because the government had, yeah. Walmart. Yeah, I'm in Walmart. Walmart's good. I'm in Walmart. SOXS is only up 50%. Isn't that the microchip ETF? Is this an inverse ETF or a regular? Oh, it's a bear. So this is an inverse, right? I think CrowdStrike is a good trade. I think CrowdStrike's high risk, high reward. Like, I think it could do really, really well, or it could fade into obscurity, after. I think I'm not sure if you're trolling. CWC. Thanks, guys. I do have a plan, but that urge to always get my losses back just takes over. Yeah, that's everybody in the beginning. That's why you trade small, you paper trade. Services is important, for sure. Yeah. Yeah, again, the big things this month: NVIDIA earnings, CPI, PPI data. That's the three biggest things this month. It's really important reports. And you want to pay attention to all those, especially NVIDIA. NVIDIA is the biggest report of the market, really. Like, that report influenced everything for me. Like, that report influenced, that report was the biggest stream we've ever done, believe it or not. Biggest live stream we've ever done was NVIDIA earnings. Not this last NVIDIA earnings. Last time we had over 10,000 concurrent viewers, though. But the one before that, we had 15,000, 14,000 concurrent viewers. Something crazy. Like, dude, I'm looking at some of these guys' thumbnails, and they're obviously AI created, and they're horrible. Walmart earnings. When does Walmart release? I'm in Walmart. I've been in Walmart for a while, though. I can't remember where I bought Walmart. I bought Walmart pre-split because I can see my price is different. Yeah, I bought up Walmart pre-split, whatever that was. Walmart earnings are Thursday. Yeah. Thursday Walmart earnings. Are you bullish for this week? I have no idea what this week's going to be, Louis. I'm bearish today, I think. I think I'm a little bit more bearish than bullish. But again, I'm just straight up guessing. I have no idea. Overall, on the week, it depends on what CPI shows up as. CPI, this week, we got a lot of stuff. Again, we've got CPI, PPI, retail sales, Philly Fed Index, New York Empire State Manufacturing Index, jobless claims, and more. Right? So it's a busy, busy week economic data-wise. Today's the slowest day. Tomorrow, Wednesday, Thursday are the busiest. And so, yeah, it's a very busy, packed, full week. Yeah, I figured you were being sarcastic, CWC. It's all good. What's your CPI expectations? I don't know. Yeah, I genuinely don't know. We'll see. Bro, dolphins are cutthroat, man. I'm watching this video of these dolphins that are just mean. All right, guys. I'm just glad to be home, man. I traveled a lot over the last couple of months. Went to Michigan, went to Florida. I'm just glad to be home. All right, so look at this spike up NVIDIA here. NVIDIA is running. So NVIDIA up to 106. This is one of the optimistic things today. Yeah, what's sarcasm? I don't even know what that is. Is he really Daniel? Where? I know is he interviewing him, Daniel? I don't know if that's true or not. Where? Is it going to be on X? Oh, interesting. Yeah. I mean, I don't know how good of a interviewer Elon's gonna be, but Alright. Yeah, sorry, I'm looking at other stuff. We got some penny stocks moving here, but NVIDIA just broke highs of pre-market. So look at that break. NVIDIA over 106 is still moving up, and I think this is great for the market. I hope I'm wrong. Like I said, I just guessed that we're going to be bearish today, and I hope I'm wrong. Apple's pulling back some. Again, if you look at gold is actually pretty strong today as well. Gold's breaking highs too. Green Lane Holdings. GNLN is moving a lot. Look, GNLN. Gap it up some here. Yeah, so look at GNLN. If you like penny stocks, look, it's up to 7s. 703s. Penny stocks running. I'm not a big penny stock trader, but it's up big. I would just be careful. It's hard to borrow, so I can't short it either. But I would just be careful, you know. Which one of the big ones? So Tuesday we have PPI inflation data, right? A very big inflation report. There's GNLN breaking highs again. Wednesday, the biggest one is CPI inflation data. So I would say tomorrow's the second biggest, Wednesday's the biggest, Thursday's the third. So Wednesday's the largest, tomorrow's the second largest, Thursday's the third largest. GNLN's running up huge percentages though. This thing's up 300+% right now. It's up to 815s, 820s here, chat. So it's up big. Currently, the average full-time worker makes about $79,000 according to the U.S. Census. Meanwhile, the survey found the average American needs an income of $186,000 to live comfortably. I think that ultimately depends on where you live, right? I think $50K a year in Texas is plenty. You know, people want to live above their means, right? And so the problem is this. Right, there's a couple problems. The first problem is that people want to live above their means too much. They really do, right? Like, people are trying. Everybody wants to look rich, look wealthy, buy and finance new cars, you know, buy relatively new big houses, and you know, again, I just don't think that's feasible right now. I don't think it's time to do that right now, and I don't think it's always the time to do that. I think if you know, I think if you make 50K and you live within your means, that's plenty. You know, in terms of percentages, right? And maybe I'm wrong, right? So 50K a year is roughly $4,200 a month, right? So $4,200 a month should be enough for one person to live, right? If you live in a reasonable place, like you can live in a townhome in Texas and live there in a nice townhome in a good area for $1,500 a month, right? So that'll give you almost $3,000 in income outside of that to live, right? About $3,000. You know, that should be enough to live off of. Groceries might take off, you know, if you eat within your means and, you know, budget appropriately, you should spend what, $1,200 of that in groceries. You know, that leaves you $1,500 extra money to spend. I think that's enough, right? Now, if you 80 is almost double that, so I think it's enough. It just depends. Depends on where you live. Now, if you're talking about New York, California, that's a different thing. That's a completely different place, a completely different budget that you're gonna need to live there. But you also get paid more if you live there, right? So if you live in New York, you're gonna get paid more. If you live in California, you're gonna get paid more. Like the average salary in New York is much higher than the average salary in Texas, and so, you know, I don't know. And again, I'm not against you. I just think a lot of people don't live within their means, man, and I think that's one of the biggest mistakes they make. You know. I think at the same time, like, I think inflation has caused a lot of people to be genuinely unhappy. And I think it's important to understand rate hikes is the only thing that's going to help that. You know, cutting rates is going to make that situation worse. If we cut rates, which we're going to do next month, unfortunately, it means that, again, unfortunately, we're going to have more inflation spikes. Look at GNLN, guys. I'm not really a big penny stock guy, but this thing's almost up to $10 a share from $2 this morning. This thing was at 240s this morning. It's now up to almost 10. Nvidia had a big slump, a big dump here. Let's see if there's a reason for it. I'm going to look at other global news reports. We had Canadian building permits show up at a much lower number than expected. B. Riley is facing widening U.S. probe over its risk disclosures, according to Bloomberg. We had some Indian numbers come out. Pfizer announced top-line results. So Pfizer should be up today, right? On this data. No, not as much as it could be. Some people can only eat organic. I mean, I get it. People might want to eat organic. But again, if they like... I mean, for them, again, that's a tough spot, you know. I'm not sure. I think people really want to eat organic, and that's great. But, you know, in life's tough, man. I can't really say it's... Again, I'm not saying I'm against you guys. I think inflation has gone up too much, and the only way to deal with that is to maintain a high interest rate environment. But the Fed wants a low interest rate environment right now, and a lot of people that are telling everybody we're in a recession and telling everybody we need to cut rates to somehow save the economy is going to make everything worse. You know, and so I think we're in a situation in which you got a lot of people in real estate specifically pushing for low rates, which is going to make everybody else's inflation spike. And I think they're convincing people that cutting rates is somehow good for people right now, and that's going to make people in these situations better. But most people are genuinely unhappy now because prices are too high. So it's a sticky world right now in economics, I would say. Yeah, for sure. There's certainly ways you could eat for less and have much more spending money also, you know. But again, you go to 80K is, you know, $6,700 a month should be plenty of money for anybody to live, you know, except for maybe if you're in New York, it's different. But in that regard, you're going to have to make sacrifices right now. Inflation is up a lot over the last few years. As a European investing in the S&P, I want you guys to cut interest rates. Why? You think cutting rates will help the S&P? It might, you know. Historically, initially, it has a positive reaction, but long-term, it can have a negative reaction. So it's not as easy. It's not as predictable as people want it to be, I think. Yeah, Powell's does sound like... I think we're going to cut rates next month for sure. You know. No, Larry, not necessarily. He says, doesn't having better housing trickle down into everything else? Not necessarily, no. It will stimulate the economy, but that will make prices higher, not lower. So, again, low interest rate environment's gonna surge spending. And what happens when people spend more? Businesses raise prices. You know, so having a low interest rate dovish environment is gonna cause price increases, not decreases. You know, and that's what a lot of people don't seem to understand. I think real estate agents really want low rates because it's easier to sell houses and mortgages in low rate environments. But it's not always the best move. You know, it's generally a risky thing. If we've dealt with big inflation spikes over the last 5 years to pull out a low interest rate environment, but there's a lot of political pressure because they want the economy to thrive right now because it's an election year. You know. So they want low interest rate environments for that reason, but, you know, we're going to be paying for that, you know. But again, real estate agents are going to do better. Lenders and banks are going to do better, right? But everybody else is going to have to pay for it. But they'll also have access to cheap lending, and so it's not always like a net negative. It's nuanced, but yeah. Yeah, I don't think we should. I hope it's just 25. And I'm okay if it's 25. I still disagree with it, but I'm okay with it. Now, if it's over 50, I think that's a bad move. Yeah, I mean, I think it's a little bit of both, Eddie, to be honest. He said, is it people spend more than they have, or is it everything's too expensive? It's both, right? Like, here's a problem. People are financing brand new cars, right? Why? With freaking 9% interest rates. And then when they're in a bad financial spot, they're like, hey guys, I'm in a bad spot. I don't know what to do. I can't afford things. It's like, yeah, because you financed a brand new car on a $50K a year salary at 9% interest. Like, terrible financial decisions. And then when they're in that situation, instead of being objective and saying, hey man, I made a dumb decision, let me fix this, they end up blaming all this other stuff. Like, the problem is that people need to make better financial decisions. The other problem is inflation has spiked. Inflation has gone up dramatically, and it's not going to go down. It's going to stay this way. And so unless we maintain a high interest rate environment, and we stop doing quantitative easing in tough economic situations, and we stay stubborn with our high interest rate environment, inflation's not going to go down. Now, if we could slow it down to where it's about neutral, that's great. I think that's a good sign. But that's a big if, and I don't know if that's necessarily going to happen. All right, so again, look at this thing, over $10. Nvidia's starting to bounce. Q is still in that little slight upward trend, although it's nothing crazy. Mortgage fraud? Yeah, yeah. Mortgages in the real estate market fell on, collateralized debt obligations and like all this stuff going on. Basically, the rating agencies weren't rating the bundles of mortgage, securities correctly, and eventually that bubble burst because of the wrong ratings, and that caused a big recession. Sure, that's what happened in 2008. But again, right now it's different. Right now it's not from that. Like, right now it's not the same thing, right? Right now we're experiencing the opposite of 2008, right? So 2008, we had weakness in mortgages and real estate. Today we're experiencing massive inflation problems, right? So from too much spending has occurred, So like 2008, we were in a recession, too little spending, too little confidence in markets. Today we are in a situation in which too much spending has occurred. What happened is 2020 happened, and the Fed panicked, and as they should have, and they tried to save the economy from what otherwise would have been a massive recession or depression. And so what they did was they started printing money, and they did it through a form called quantitative easing. What this is they create bank reserves online, and they use those bank reserves to buy up bonds and other, assets like that. And this injects liquidity into those markets and ultimately allows banks to lower interest rates a little bit faster than just direct rate cuts, right? So like, you can cut rates, there's a lag, it takes time, or you can do QE, print money, try to bring interest rates down faster, which is what they did. They did both, right? They also sent out stimulus checks simultaneously, right? All of this stuff did what? It kind of saved us from what would have been a deep recession in 2020, or a depression. And it brought us back to kind of business as usual in regards to the economy. But the consequence of all that stuff is inflation. All that spending, all that forced spending causes what? Causes inflation. Businesses raise prices. And you see this reflected in a lot of different ways. You can see it in Rolex prices doubled. Bernard Arnault, one of the richest dudes in the world now, he owns Louis Vuitton. So luxury goods prices spiked, and now we're kind of seeing the correction in those. And personally, I think it's time to buy those now because we're seeing some corrections. Although, who knows? Not 100% sure, right? But again, the consequence of all that, it was inflation. And inflation doesn't go down. It doesn't literally go down. We can slow it down, and that's what we want to do. When we say inflation's going down, we're usually talking about slowing down. If we could slow it down to only a 2% rise yearly, that's good. But the price spikes that we got from all of that stuff in 2020 is what we're currently experiencing now. One of the biggest reasons people are unhappy now is from that. And again, to be fair, global pandemic, what are we going to do? Like, we can't really blame anybody too heavily because it's kind of outside. I mean, you could say people made good or bad decisions, sure, but it's a global pandemic from 2020. Like, everybody knows. I think if we didn't do all that stuff, we would have gone into a deep recession, and we might be feeling a little bit better now than what we're currently in, but at the time it would have been a lot worse for people, and so there's a lot of ways you could look at it. But yeah. Do you think a rate cut needs to come to spur auto sales? No. I think real estate has increased 60-70% over the past 5 years. I think car prices have spiked to unreasonable levels as well, right? And so how do we correct that? You keep high interest rates. You discourage those markets. Let the markets come back down a little bit. And I think that's good. I think it's necessary, right? Of course, if you talk to real estate agents or lenders, they're going to say, oh, it's the end of the world and cry about it. But I think that's what we need to do. I think it needs to happen. I think we need to maintain those high interest rates because that's going to push those markets where they need to go, which is back down a little bit. And if we're too stubborn and lenders pressure everybody and you know, the election year pressures people to cut rates too much too fast, the consequence is going to be high prices and unreasonable price spikes and all those things in automotive and housing, you know, and I think we need those markets to correct. They're up too much. Anyway, SPY is right at the 200 EMA VWAP level. We pull up the SPY here. NVIDIA is still correcting down. It's still over the VWAP though. We'll see if that holds. There's the SPY. SPY at 535. It's like right at that VWAP 200 EMA level. I always like watching the 200 EMA. It's a big milestone spot. I love your channel. Thanks for providing pre-market lives. It really helps a lot. Hey, thanks, Adam. Appreciate it, man. Yeah, if you guys remember, after 2020, car prices were obscene. People were selling a 20-year-old used Tacoma for 40 grand, you know. Prices were just ridiculous. And again, a lot of people benefited from it. A lot of people's cars appreciated so much over just a 12-month period that they sold their cars and they sat on the cash, which was the smart move, you know. But again, how do we get those to correct? High interest rates. People are putting 50-60% of their income for mortgages, at least little room for inflation. Right, but then it's not time to own a house, you know. Everybody wants to own a house. Everybody wants to buy a new car. But again, sometimes those are luxuries that you're just not able to get, and you got to just wait for the more opportune time to do it. Yeah, baseball cards, Pokemon cards, Rolex prices, you know, Louis Vuitton prices. Like, these all of them spiked. Like, look, like I could show you, it's reflected in a lot of surprising ways, right? So like, here's a Rolex price chart, right? So Rolex prices, like, look, here's 2020. It's reflected in a lot of ways, right? Rolex prices here, 2020, boom. Post 2020, everybody had stimulus, low interest rate environment. You know, what happened? Everybody bought Rolexes. You know, now we have this massive pullback here. And personally, again, in my opinion, it's time to buy, right? In my opinion, I think in terms of just general dip buying strategy, I think now's the time to buy. Now, Rolexes surprisingly keep up with inflation, right? Like, I'm a big watch guy. And Rolexes do keep up with inflation, you know. Rolexes, people always hate on people who buy and you know, Rolexes or whatever. But to be honest, it makes sense, right? So imagine it like this. You could buy a Rolex, wear it for 2 years, sell it for more than you bought it. And you just got a Rolex that you're able to wear for years for free. You know, you might actually make a little bit of money doing that. And they generally keep up with inflation. If you look at a long-term chart, it's not perfect. I wouldn't buy a lot of the other luxury brands, you know, but 2017, they were way down here. So generally speaking, they keep up with inflation. I'm good, Reedy. I'm good, bro. Sorry, I'm not going to show you guys all my stuff. Most of them are, again, kept at safety deposit boxes. I'm not, you know, I don't even like wearing them that much, but they're investments. Yeah, so there's GNLN, crazy move. Again, SPY did bounce at that 200 EMA. Might buy the dip here, but yeah, I'm gonna buy the dip on the SPY, see what happens. We'll buy 150 shares of the SPY. We get filled. All right, so we're in 150 shares. What about people who just want to buy groceries at a reasonable price? Well, groceries are one of the most volatile things, Eddie. Right, so when you look at inflation data, like tomorrow we have PPI inflation, right? The day after we have CPI. What you really want to look at is core data, because that excludes food and energy prices, which is like basically gas and food. Those are the two most volatile sectors of price. And so again, food and energy, you're going to have volatility in prices. You know, bulk, Costco, in the end, the way you hedge against this type of inflation really is investing, right? You invest and you hedge. If you don't invest and hedge over time into something, you're going to lose money to inflation, right? The most conventional, like the stock market will give you about 10% every year, 8 to 10% on average. Not every year, right? You're going to have red markets, you're going to have bear markets, you're going to have good years, bad years, but the good years compensate for the bad years. And so when you have good years, a lot of the time they're really good years. An example of this is last year we had 24% gains in the S&P. And so over time that helps hedge against inflation. Gold, long-term good inflation hedge. Real estate, long-term good inflation hedge. Precious metals, long-term good inflation hedge. Bonds, right? Even if you want a completely safe version, like completely safe, guaranteed, treasury bonds or treasury bond ETFs. You could buy. You could do certified deposits. CDs, right? Like CDs will give you, and basically these will all pay you roughly 5%. And so if you invest 100K, all right, so we're going to scalp that, take a little bit off, wait for the rest to move. But anyways, so say you invest 100K into certified deposits or treasury bonds, like whatever you want to do. You're going to earn about 5%. Say you do a 2-year treasury bond right now, it's going to be about 5%. Right? So you're going to earn $5K a year. Annualized, you're going to earn about $416 a year. And at the end of that 2-year period, you're going to get your 100K back. So you're going to earn about 10% in 2 years through bonds, guaranteed, if you do treasury bonds. Or you could buy, like, I like using T-bill, right? So right now you'll see this position here. T-bill, I show people this one all the time. I have about 70K invested into this. Every single month, they pay me 5.2 or 5.3%, whatever it is, right? So every single month, without fail, they pay me this, And so basically, if I have 70K invested into this, they pay me, the last check they gave me was about $306, and they pay it through dividend payments, but it pays you annually 5.3%. So 70K, it's going to be about $3,700, right? Divided by 12 is the monthly, and so this is roughly what they pay me. They pay me 306, not 309. So whatever the discrepancy is from fees or whatever. But again, this is guaranteed. I get it deposited into my account every single month. These are all a lot of ways to hedge against that inflation, because that's the really only way to do it. Like, we can't control food prices. If you sit on cash, it's the biggest mistake usually, because that you're going to lose money over time no matter what. As a happy-go-lucky family man with no wealth education, the only way to beat grocery inflation would be to buy in bulk. Yeah, Costco it up, sir. Lock that price in, and we'll just say, oh, I sold 50. I didn't want to sell 50. Oh, well. Yeah, you can do certified deposits, same thing. Same thing. Like basically, what a certified deposit is, a bank will say, "Hey, if you open up an account with us, we'll pay you X amount. Usually, it's anywhere between like 3 to 5%. You just got to keep your money in our bank for that period of time, right? So, say it's a 3-month CD at 5%. We'll just call it 5%, right? So, say you open up an account, you put 100K in there. You know, they'll pay you 5%. You'll get 5K a year, but it's only for 3 months. So you get $416 a month times 3. Oops. You're gonna make about $1,250 for over that 3-month period. You know, using that CD. Then you can find another bank that's also paying you 5%, and then move your money there. And it's a much less passive way to make your 5% or whatever you're looking for. You know, there's a lot easier ways to do it, to be honest. But at the same time, you know, you're forming relationships with banks, right? Which I think is probably the biggest benefit, which you're forming relationships with banks and bankers, and that can be a very useful thing. So, you know, there's always a silver lining there, I think, with CDs, but it's all preference. Anyways. And here's NVIDIA. NVIDIA up to 106. I think I'm going to skip the day trading stream today, chat. We're just going to hang out, and I'll just retitle my stream instead of going all the way to a day trading stream and all that stuff. Just get ready. We're going to get ready for CPI inflation data tomorrow. I know we're starting a little bit late. All right. Let me get rid of pre-market stuff. Yeah, so we're going to be day trading futures. Yeah, so we're going to be trading the New York Open. All right. There we go. Optimistic for NVIDIA. Yeah, NVIDIA up to 106 looks good. Again, you can look at like Apple here as well, maybe. I've got these Audible credits that I don't ever use. All right, let me pull up Chat GPT. Yeah, so again, somebody's asking me what's the benefit of of real estate investment trust or income trust versus You mean symbol O? I don't know about symbol O. Symbol O looks to be a much different thing. This is a real estate investment trust. So, like, the difference is that there's a lot of differences. T-bill is automatic. So, like, T-bill is going to stay flat in terms of price for the most part, with reason. Like, you can see on a weekly chart. Yeah, on a weekly chart, it goes down and down and down and down and then back up. So it basically stays flat. Slight downtrending, but stays flat mostly, depending on bonds. Bonds are also guaranteed returns, right? So bonds are guaranteed returns by the U.S. government. Or maybe I should do a day trading stream. You know what? I'm going to do a day trading stream. I don't know. What do you guys think? Let me see. Should I do a day trading stream? Yes or no? Let me ask Pawn. What do you guys think? Let me know. Anyways, I don't know much about O, to be honest. Alright, so Realty Income is a well-known commercial property real estate investment trust. It's classified as a diversified, meaning it invests in a variety of retail and commercial. It employs a monthly dividend. How much does it pay? Okay, looks like people want to do day trading stream. All right, well, we changed our minds. We'll pivot over to there. That's fine. It's okay. So we'll go ahead and do that. Just bear with me. Chat. Got you guys. Hold on. Yeah. Yeah, so it's CPI week 2, which is a big week. Stick around. We are going to be doing a day trading stream today. I have to refresh this maybe. There it is. All right. All right, guys. Yeah, so again, SPY went all the way back down. Am I still holding this? I think I am. I don't know what to do with this. I don't know whether I should sell or hold or what. There we go. Didn't we have a rate decision? Yes, we did last week. Or when was the rate decision? I think it was 2 weeks ago. So the rate decision happens every 6 weeks. No matter what, they're making a rate decision every 6 weeks. Last few weeks for me, at least, the auto redirect hasn't worked with Firefox. Yeah, I don't know. So here's the day trading stream link if you want to wait for it. Yeah, so there's the day trading stream link. Yeah, chat it up there. We're gonna start it up in about 5 minutes. Yeah, so I'm in this right now. I'm up a little bit. I don't know what I want to do with the rest. I'm going to sell before the open for sure, but I could probably just let it chill for a minute. Make sure redirect is in there, so we are in there. All right, cool. Yeah, so again, the big question, so rate cuts are going to have a big influence. Why? Because we've been pausing rates for a year straight now. Like, right, if we look at the federal funds rate decision graph, right, here's the Fed funds graph, right? So the reason this is such a massive report is because for the last year straight, basically since August of last year, we have been pausing. We haven't changed. So for a year straight, we've done one thing, and a rate cut is going to pivot. So this is going to decrease it. If it's a 25 basis point cut, we're going to be going down a little bit here. We're going to go down some. I think we're at 5.5 right now. So we're going to go down to 5.25. You know, so again, we'll see what happens there. It's important, but you know, it's a big report. So again, I don't know what we're going to do. I'm going to go ahead and move on over to the day trading stream chat. So again, I'm going to get everything ready, and then we're going to pivot over to our day trading stream. We're going to be day trading today live. And let's get ready. Again, so far we've got some dips. I'm still in the SPY here. I don't want to hold this through the open though. So I do not want to hold this through the open. So I'll put the SPY trade up here. I'm just going to get out there. That's fine. All right, guys. We're going to go over to our day trading stream. I'll see you guys over there. Again, if it doesn't bring you there, the link is in the chat right there. I'll see you guys there.